What's going on, trading family? Let's talk about today's economic data. Definitely a wild one overall. We got NFP data that did come out and we got those revised numbers. So I'm going to just break everything down for you guys so you could understand what is going on with the markets and also what to pay attention to moving forward as we are heading closer to the end of the year. This was pretty much the one of the last very important economic data prints for this year. So it's very important. But just to start this off, right? You could look at the overall numbers that non-farm payrolls did come out at 64,000 jobs positive. But the problem was we was having two prints. So because of the government shutdown, they were showing us the numbers that did happen in October, okay? Which was like, I believe they revised it again. I'll get to that point afterwards. But you could just see that the previous number was negative 105,000. That's a very, very, very bad print. Just imagine if the government shutdown never happened and we got that actual print. What you guys think how the markets would have reacted, right? Because that would have been the key signal of recessionary fears, right? We would have saw equities tanking to all-time lows. We would have been, Michael Berry would have been right, right? We would have saw gold hit an all-time highs. It would have just been a total disaster, major shit show. So I feel like the government shutdown was the blinders, right? Because the Feds never changed up, but it prevented something, right? And I think they did it purposely. And then they're telling us that the numbers is not accurate and stuff like that moving forward. But this is interesting. I personally feel like there's a lot of things happening behind the scenes that they're not telling us. Just before we get to the data, right? Because this happened last night. We can see that the Federal Reserve just pumped $5.2 billion into the U.S. banking system through overnight repos. This is the sixth largest liquidity injection since COVID, right? So you can just see like this is what happened last night. Interesting, right? Very, very, very interesting, because why are they doing that? And I posted it in a group last night too, as you can just see here, because when this actually happened, the stock market dropped last night. So you guys could actually look at the markets and you could just see how the stock market dropped last night. And that was the reason why, right? Because I feel that there's something happening behind the scenes they don't want us to really know about. I feel like there's something like at first we already know that savings, right? People's savings is diminished. People's in debt, right? We see that credit cards is in defaults. People is behind auto loan payments. Mortgages, people ain't getting that many mortgages, right? Housing is doing a little bad. So we're seeing that the credit card stress, the debt stress is there. Getting access to money is a lot harder also, especially with high interest rates. So all of this is combining, but we don't have a physical problem. What is the actual problem? This is why they're talking about the bubble is going to happen, because the stock market is still rising, but something is going to break where QE is going to happen, because when them giving money, this is not QE, right? It's just overnight support just to make access to money a lot easier. But QE, in order for QE to happen, something bad has to happen, right? But coming into today's data, right, it wasn't really that bad because non-farm was stronger. Unemployment is higher, but unemployment going to 4.6, which was it's expected. Jerome Powell already confirmed to us that they're expecting unemployment to rise. Okay. So the fact that he's already expecting that's not going to really signal recessionary reactions or for the Federal Reserve right now to start pricing in aggressive rate cuts, because they already know that if NFP would have came in extremely bad today, that would have changed the whole ball. That would have been the game changer right there. All right. But for this print that happened today, just supports the overall direction of what we already know, which is a dovish Federal Reserve. They're still cutting interest rates, but it's giving the Feds breathing room to still hold rates if they want to. But cut only by a 25 basis point period. It doesn't support 50 basis point cuts. Okay. So it's not about what Trump wants. The data doesn't support that. And when we're looking at PMI data, it is still above 50. So PMI growth is still in expansionary levels. If this number would have came out of 49, that's contractionary, then we'll be worried. So as of today, nothing really to worry about is what I'm trying to say. So when we was live with the private group, like members took advantage, really good opportunities of gold buys, right? They took advantage of the gold buys. That was, for me, like that was the easiest opportunity of the session. When it came to equities though, right? No real edge, because I'll just show you guys here, because equities doesn't really give us a direction, because this doesn't really support anything when it comes to a opportunity for today. Like, because the revision, the markets can't react to October's numbers, but it still shows that the economy is still doing pretty well, right? So I like the idea of equities pushing lower. You could take advantage of those buys from support, because still got strong growth, still got rate cuts. This is still showing that soft landing. So no real reason to sell the stock market at the moment, but it is up to you guys how you want to trade it. But we got an overall direction. So this is why I was telling the members in a private group, take advantage of equity buys, right? If those opportunities come. And then when it comes to the dollar, we want dollar weakness, but the opportunity today is not the opportunity, because the sales on the dollar was like during FOMC. It was like earlier last week, we should be looking for dollar sales. Now we need new reasons for dollar sales. And I don't think today pretty much confirmed that. So that's why I was a little more patient for today. But when it comes to gold, right, we still got a lot of scenarios to focus on. We still got geopolitical tensions. Gold is still an overall buy, because we're still having macro geopolitical tensions that is impacting the market. So that could support upside for gold as well. And we already got a dovish Fed. So that's another reason for gold upside. So I still like upside for gold if you could take advantage of those opportunities. And later this week, we also got inflation data. So tomorrow we still got CPI, which they're expecting inflation to come in lower. So if we do get lower inflation, expect weaker dollar, stronger equities. All right. If we get higher inflation, that could support dollar upside, and that could push equities lower. So that could be really good tradable opportunities. And if you guys want to trade live with me and join my private group, right? Because I go live for all of these events and we trade it together. And as you can just see, I send the Zoom links here. All the recordings that we do for the live calls is uploaded, and we trade the data together. So if you guys are interested, just go to the link in the description on the bio. Hopefully this is helpful, guys, because nothing really changed, but let's let this week pass. Okay. Because let's see what happens with inflation. Today's data didn't really change much from a Fed perspective, right? Still showing strong growth, but it still supports rate cuts. But today's data didn't support aggressive rate cuts for next year. Market's still priced in 2 rate cuts. So this didn't really change that perspective. So this is why we didn't really get those drastic moves moving forward. Okay. Hopefully this is helpful.